Welcome to Subramani. If you want surveys on whether the market is bullish or bearish, unfortunately we have to go to the US where they spend money on doing such surveys. So by some measure, the US stock market sentiment is today as negative as it was in March 2009, which perhaps make it worse than March 2020. And when the sentiment is so low, it is normally the bell to ring and say, oh, now there is a bull market in the offing, right? So after that March 2009 doom prediction, or where everybody was bearish about the market went on a bull run for the next 10 years, right? So that is what happened in the US. Now, do we have such surveys in India? The answer is no, we don't have enough such surveys. But one thing is certain, the number of accounts which were being opened has definitely slowed down. The SIP amount has not slowed down, but of course I am a little wary of that SIP number, because the assumption is that so many SIPs are coming and there is redemption happening, but sorry, the redemption is happening only from the people who came in as a lump sum. The SIP investor is very nice, he is not redeeming. That is the data, so we are not talking about that data. But largely in America, one thing which is a good indicator that the youngsters are today saying, oh, how do I benefit by this? Last so many years, maybe 10 years, they pumped money into the market saying buy at any price and it will go do well. Well, these are all people who are products of the interest rate going down, right? From 1980 to 2021 or 22, interest rates have only gone down. So people who have only seen interest rates going down do not even know how the market will react when the interest rate goes up. None of us know, right? We have been lulled into believing that interest rates can only go down, it cannot go up, at least if you are in the US. In India, interest rates have fluctuated more. We have seen 5.5%, we have seen 7.5%, sorry, on the gilt. We have seen as low as 5%, if I am not wrong, and then we have now seen 7.5, 7.6% on the gilt. So we have seen more fluctuation, but the US has not seen this kind of fluctuation, which means many fund managers forget their investors are not ready for this kind of an interest rate hike. People forget that Walker, I think, increased interest rates by 4% or something in a day. He just went from, say, 7% to 11% in just one day. He was that vicious in increasing. He did not do this 0.75, 0.75, 0.5. Will it be 0.75 or 1? These kind of games were never played in one particular day. He had to handle the oil crisis of the 1970s, and that's what he did. But the kids of today's generation, when they see that the market is coming down, they realize many of these are all or none kind of people. So instead of the only way they can make money, or they think, is by going short. So many people have gone short. There are ETFs which have done well when they've gone short. There are leveraged ETFs which have done well. So today there are many youngsters who believe, oh, we saw what was happening in Europe, we have seen what is happening in other parts of Asia. We don't think, or even parts of US, there is an energy crisis, there is a war which is not ending, then there is the ESG crisis. Well, I'm calling it the ESG crisis because then you have politicians walking out of Democrats and saying, oh, this is not the way the country is to be run. So are we headed for another crisis in US? We don't know. But there are ETFs which are saying, okay, we will give you the return which will be negative, or we will give you a return which will work on the assumption that the markets will go down, right? So if there can be bull ETFs, there can be bear ETFs. So the bear ETFs are now collecting a lot of money in the US. Unfortunately, in India, we don't have long short funds or short funds. So these short funds are now collecting a lot of money. Also very evident that many youngsters have decided that they can now make money by going short. A quick advice, going short can completely ruin you, because when you go long, you know how much you're putting. Suppose you've got 10,000 rupees and you put 10,000 rupees, the maximum you can lose is 10,000 rupees. Now, if you leverage 10,000 rupees and go short in the market, you can lose 10x of what you have put. So you can put 10,000 and lose 1 lakh. Now that doesn't sound very scary, but you can put 1 crore and lose 10 crores. Now that looks scary, right? So the question is, are youngsters going short? The answer is yes, youngsters are going short. Do we have ETFs or regular mutual funds in India which will help you go short? No. Can a AIF go short? Yes. Can a PMS go short? Yes. So is that happening? I have no clue whether that's happening. I don't have enough data. Maybe there is data available, but I don't have access to that data, so I don't know. But the US is attracting a lot of bear market funds, the funds which are willing to go short and which are willing to leverage and go short, right? So you borrow some shares, go short on that, you have to deliver the shares. But remember, going short can be expensive because the rate at which the guy is willing to lend to you could be 5% a year. So that 5% also has to be added. So you make 20%, that's fantastic, but that 20%, it's not 20%, it is 20 minus 5, 15%, right? That's how you have to look at it. The American Association of Individual Investors shows that the number of bearish to bullish is 3.4 to 1. So obviously 3.5 times the number of people who are the number of bears or number of pessimists are 3.5 times the number of optimists. So which is and that figure has been held constant since April itself. So that's not really changing much. But traditionally, this would mean that it could be a big bull run. Maybe the S&P could rise and things like that, but not so quick, because people are saying one thing and they're meaning another thing. But the indices, the PE of the American indices is at 16%, 16. It's not really gone down. So let me just pick up the numbers which are old. This is the market is down 10.5% in this period since April, but with a couple of bear market rallies. 3 years from now, will this be a decent time? So now let me look at the numbers. So the biggest contrarian buying opportunities were March 2009 and July 2020, right? So both have in common, but both have one thing in common: the Fed kept on decreasing interest rates, or interest rates were very close to zero. So that is one thing which aided today. That is not helping. Second, the PE in those days, let me just pick up, can I see the PE? Yes, the PE was around 10, and in March 2020 they reached 14, right? March 2009 the PE was 10, and then in March 2020 the PE was 14. Now the PE, now there are two things which are going against you. One, the PE is 16. It's not really small. It's not really the lucrative. Your mouth is not dripping, right? Your saliva is not dripping, saying, "Wow, 16 PE. It's a great time to be buying." In the US, I'm not talking about Indian context. So and interest rates are likely to harden or go up. So these two things are tempting me to say this time it may be different, right? So this may be different, but the market is not really in a hurry to go up. In fact, the fact that bear market funds are collecting money could be a great trigger for the market to go up. But will it go up? I do not know. Tesla is down some 33%. Remember when Tesla, Musk was dumping the shares, the retail was very happily buying it about a year ago. It's dropped 33%. It had to drop, right? Because the market cap of Tesla was more than the auto industry of US, and perhaps US plus Japan, right? That's the kind of valuation it had. We all knew Tesla would fall one day. We had no clue when, right? So that in searching for that when, we spend our lives. Don't do that. When you find valuations are too damn high, it is too damn high. Your value investing will come back. There is no doubt about that. But anyway, I don't think market is today at that stage when the American markets are going to boom for the next 10 years. No, we have not reached that stage. Investors say they are bearish in surveys, but they are not proving it by selling the shares and bringing the PE down. So it's very scared to deal with people who say something on the survey. On the survey form, they don't want to look stupid, but in their real life thing, they believe, no, this is temporary, so I should be buying. Therefore, the PE is not falling. So when you see people's sentiment and when you get this feedback, you have to compare the two and say, this is what they're saying, this is what they're doing. So I think what they're doing is they're still not fully bearish. I'm not even saying you get into the bear territory, but this is not, perhaps not the end of a bear market to start a bull rally, because the other factors needed for the bull rally is missing. All over the world there is not so much sentiment of money is going to come and pour into the American markets. If we are talking of a recession, maybe we are already there, maybe it's time for us to come out of a recession. Interest rates are not likely to go down in a hurry. Maybe 2023 end, maybe mid 2024, and interest rate will start going down, perhaps. But the uninterrupted fall in the interest rates from 1980 to 2022 is definitely reversed. So how the market will behave, we don't know. If you're going short, be very, very ultra careful how you go short. Unfortunately, in India, you don't have long short funds, you don't have cryptocurrency funds, you have none of them. So I have no clue how you can go short, and be careful. I don't go short, and I've not lost money, but I don't like to go short. Thank you.